Hey everyone, I'm Charting Man Dan of the Chart Guys, full-time trader for the last 13 years. Fear returns as the banking narrative revives itself. We had the bears in full control today with some clues on the morning showing us that they were gaining some momentum. We'll check in on everything and see where we stand on the charts.
All right, we got a good bit to talk about today. So first off, we're going to start with the banking fears. Then I'm going to go into some trade review a little bit later in the video, talking about a riot trade and using news as a fundamental reason to look for entries, and also a trade with Baba. And we'll go through the rest of the charts from there. But first off, the banking scare. So we're just reviving the same regional banking fears that we saw a month ago. And this is in response to FRC. So FRC had earnings overnight last night, and you can see the huge gap down and dump, and then it halted during the day today, down 50% from the high of yesterday. And this is just, the same thing that we saw happen with Silicon Valley Bank in terms of this free fall, and potentially the government's going to have to step in and, guarantee debtors again. It's just, again, it's the same thing, and it's coming back up. And so you've got your regional bank ETF, KRE, that's dropping to new fear lows. And as far as I'm concerned, we're not going to see these banking fears diminish as long as KRE is hitting fresh lows. And so KRE, bear flags confirmed, lead bear sector, and the smaller banks still certainly at risk of these headlines. And so with that, the financial sector had a big red day today, closed at the low, and the weekly consolidation is underway. We knew the weekly lower high was the most likely scenario. We were watching the EMA 12 resistance rejection. And so now it's just a question of, can XLF bulls hold 30.39 for a weekly higher low and a tightening range, or do we roll over into fresh lows? But clear weekly consolidation now underway. It started with, the metals and oil and then Bitcoin, and now all these other sectors are following along. XLF, SPY, QQQ all started the weekly consolidation today as well. So we're going to keep an eye on this, but that narrative is just deja vu. We've seen this movie before. We saw what happened a month ago. A month ago, there were the banking fears. Money fled these regional banks, and money poured into big tech, Bitcoin, and metals. And so as soon as I see those headlines revived for the fear today, we look long metals, we look long Bitcoin and crypto names. And so Riot, 134, watching Riot for BTC to potentially benefit from the banking fears. Bitcoin is very tight. That was right here. It's almost looking like, this is an alert that I sent out to 1 million people, and everybody just bought on that post, which obviously isn't the case. We're not trading with $50 million, unfortunately, but a big time rally from that point. And MARA did the same thing. So Bitcoin broke its tightening range bullish. These crypto stocks ended up going up 5-6% from that point in time. And again, it was just reacting. It was just reacting to the same thing already happening and the same narrative. And so we look at the metals and we see gold is up a bit. And so I grabbed a little small swing position in GLD. And my reasoning is, if it's a weekly bull flag, we're going to see all-time highs, because all-time high double top is right there. And it was just enough for me to say, all right, I'll grab a small starter position just in case that's all the consolidation we're going to see before continuation. But those are the plays to be watching for this narrative. Bitcoin, metals, and tech were the biggest takeaways, and the big bears are, of course, the small regional banks that are at risk with all these headlines. So we have earnings after hours now. We've got that to talk about. So Google is up after hours. Not huge, but we're up 4 or 5%. Microsoft is up a bit more. Microsoft is testing key 292. Remember this level on Microsoft? 292 is a triple top. We topped here, double top, triple top, and now after hours, it is a quadruple top. So not a hard top fish for aggressive bears to short just under 292 resistance. We ended up pulling back a couple percent from that point, and it's clearly a bullish reaction. The big question for the rest of the week is, can Microsoft break 292 to get to the highest levels that we've seen in over a year? And I have Microsoft in my IRA from a long entry back here, so this is a good thing. Also have, well, not going to go into every position, but ARKK short from yesterday following through nicely. This is an example of a lack of bias as a trader. I was looking at ARK as a bull. I pulled up ARK and I said the biotech sector is breaking out, and this is going back a few days. I'm watching for other growth names to be laggard bulls. So I started watching ARK on a daily basis, and that was back when we were trading right here. And so I'm saying, all right, I'm looking for a long entry, and I have a long bias, and I'm looking for it to be a laggard bull. And then I saw the Tesla bearish reaction. I saw the bear correlation to QQQ, and I said, I now like it as a bear. And so after the dump yesterday, got it on the hourly lower high bounce and took some off. I'm out a third of that position into the weakness today. And now we're watching the key weekly support on ARK at 34.81, because if that level does hold, it is a weekly equilibrium that will continue to tighten. So taking some profit into this weakness on this drop. The NASDAQ it broke. It was bearish today. We did the public live stream. Appreciate all of you that tuned in. And we saw the checklist for the bears. Confirmed the 5-minute downtrend. Check for the bears. Break the low of yesterday. Check. Break the key daily support. Check. Apple needs a new low of the day. Got it. All major sectors dropping at the same time. Check. It was just constant bears getting everything that they wanted to see, and so they had a trending day. Now, that being said, we've seen half of that drop given back now because of this bullish reaction after hours to earnings. We'll have to see how tomorrow shakes out when there's significant volume being traded after the bell rings, but could just be an hourly lower high. If this move fades, the hourly downtrend is going to be our guide, but it is notable that the NASDAQ broke this range bearish. If it's a bear break with no follow through, the weekly consolidation will be healthy. So my guide has been, if we look at SPY, and again, SPY weekly stair step bear break, my guide was if the daily EMA 12 is holding, the bulls have complete control. Got some red flags yesterday by setting daily higher lows and then dropping down and breaking support on some names like QQQ. That was definitely a red flag, and obviously following through with it today. But now I go to the same thing on the weekly. Simple statement. If weekly EMA 12 support holds, this is very healthy consolidation. We know weekly consolidations do. We've been going straight up for 5 weeks. We're right at a key resistance level. Bulls are hoping this is a cup and handle kind of pattern. I'm not even going to look at that at this point. But the simple statement for me is if weekly EMA 12 holds on SPY and QQQ, it remains a very bullish chart. Lose it and have the retracement size retrace towards 50%. All right, that's red flags for the bulls. But we'll see. That support is in play, and we're going to watch the rest of the earnings. We've still got Amazon, Apple, Meta to go out of the major names. But bears win today. We know that much. Bounce after hours, just looking for an hourly lower high, cooling off RSI levels. Semiconductors, we could say that the bears were positioned very well if QQQ broke support. I think I made that exact statement yesterday. And so obviously we broke support, big spike in volume, and the most convincing red day that we've seen in a couple of weeks for SMH. NVDA is still holding on much stronger, but it's on the verge of hitting the lowest level in weeks if 262.20 breaks. And semiconductors definitely leading the way down over the past few weeks. 232.78 is a key support on SMH, but even if we hold it, we're then going to be watching for the potential of a weekly head and shoulders to try and shape up. Healthcare, daily lower high set. How the broader market bears really want to see 132.77 break here on XLV. And that would then start weekly consolidation here as well. This is the one remaining sector that I'm watching that does not have weekly consolidation underway yet. Still a stair step from the last 5 weeks. J&J is the long IRA that I'm in. Relative strength starting to show itself. We already had earnings, and we need to confirm the weekly uptrend for a long-term bottom to be set. And so entered when the weekly stair step broke bull. Exited enough where break even is under 150. Honestly, I know what Johnson & Johnson is as a company. I don't know anything about the fundamentals. It's in my IRA for the sole purpose, the sole reason that I saw a setup where I could make an entry and get myself in a risk-free position. That's the only reason. At no point in my life have I ever thought, I want J&J in my IRA. But I saw that weekly stair step and a drop for 11 weeks in a row, and I like playing oversold bounces, and so now it's in my IRA. And maybe I'll hold it there for years. I have no idea. But that's just me as a technical trader having my IRA dictated by the technicals, not the fundamentals. One thing that is missing from JNJ that is trying to present itself is the relative strength. JNJ divided by XLV. This shows us how is JNJ trading compared to the healthcare sector as a whole. Need to get over 125 for it to be the strongest that it's been in multiple months. That would be notable. And when I did make that long entry, that was the thing that was missing. I generally want to be entering names that have relative strength, and that was not the case for JNJ. I just went with it because of its own individual technical setup, but that is now something that I'm hoping presents itself. So we already went over the financial sector. Again, hourly downtrends are our guides on all these names. IWM failed to confirm the daily uptrend, and now we're breaking support. 172.53 is the next key level from here. So still weak there. Biotech sector, weekly consolidation under, not yet, still an inside bar. Spoke too soon, but we are looking for a weekly lower high. Stair step down, lower high every single candle, stair step up. Before I forget, Lori is doing a webinar on Thursday at 5 p.m. and it is private. You got to sign up, but if you can't make it, we will send you the recording to your email, and that link is in the comments of this video. It's going to be a good webinar about finding your trading edge, which is important to do if you want to be a successful trader. Baba. So Baba's been an absolute dump fest for the last 5 days. Gap downs just decimated. And if we look at the weekly time frame, we've got the 100% move up, we've got a massive pullback, another massive bounce, and I'm looking for an equilibrium. I'm looking for a weekly higher low to try and form compared to 79.48 to continue tightening up within this range. So I looked today and saw that we had 4-hour RSI in the teens, hourly RSI almost single digits. And so I say, okay, I'm watching for a Baba bounce. And what I was using is a bit more of an advanced trading style. And did I delete it? So this is essentially a moving target of resistance. So I was just staring at Baba trading. I wasn't using level 2. I was just staring at the bid and the ask. And there was a hidden wall at 82.41. Let's see if we can zoom in and find this. It's going to be difficult. 82.41 resistance. 82.41. So right here, 82.42. So look at that. You can see it on the 10-second chart. It very clearly stands out. But what I was just watching was the bid and the ask and just hit the ask. Boom, boom, boom. Just a lot of orders hitting the ask, and it kept refilling. Look at how many shares are hitting here. We're talking tens of thousands of shares. And the ask is only showing, 500 shares, 1,000 shares, whatever it's showing. And so I'm seeing 10 times the volume that is showing is hitting the ask, and we're not budging. That shows me it's an iceberg order. You can Google iceberg orders if you want to learn more about it. But it's essentially just a hidden order where we have no idea how many shares are on that level, but it's clear that that level is being defended. And so we roll over and break down to lower lows. And so I make that observation, that there is a clear wall of resistance at that level. And then I saw it move. So I said, this is the kind of observation that would have me long if that breaks, if the wall breaks, and then I just stick my stop under the low of the day. And it's the same as a bottom fish, because at that point in time, the low of the day was 82.30, so I'd be risking like 15 cents. It's a different kind of bottom fish kind of play. And so then I saw the wall move. It then moved down to 28. And this chart is showing 29. But again, we hit it 4, 5, 6, 7 times. Just can't get over it. And when we finally get over it, I go long. And I put my stop under 82.21, and it's just a bottom fish play. Bottom fish plays most often are you're dropping down to a key support, and then you scale in or you make an entry and you put your stop under the support. This is waiting for a hidden wall to break because someone was selling a bunch of shares, and as soon as that breaks, look at the shift in momentum. It was complete bears the entire day, and then that wall breaks, and look at from that point forward. It was like the tides turn. And so that happens often when it's a large hidden order that is either holding things up and finally breaks, or keeping things down and finally breaks bullish. And so I make my long entry. I think I got filled at 82.31. I exit half into the initial bull move, and now my stop is under the low of the day, risk-free. And so I exited a little bit more into the end of the day, and I end up with a break-even position. When I was making this trade, I had no I had no desire to swing BABA long against this momentum. But now I've got a break even of like 81.50. So we can open 2% lower from here and I'll be break even on the trade. So I have profit cushion to work with and the 4-hour RSI is still crushed. So I say, all right, I'll give it a try because I have that profit cushion to work with. I would never swing BABA, buying right at the end of the day and hoping it goes up overnight. The only reason I'm swinging it is because of how extreme it is, because support is in play, and because I have that profit cushion to work with. So that's a little bit more of an advanced trading style of just observing. And again, it's reacting. I didn't predict. I had no idea if we would break the wall. But as soon as I saw the wall break, I react. I am a reactive trader, and there are still plenty of ways to be a reactive trader and make money. I reacted to the banking narrative reviving itself and looked long on Riot and MARA because of that. So that's me using fundamentals to a certain degree and reacting. And of course, the trader in me then establishes a trade game plan, sets the risk amount, puts in the stop loss and all that. But the trade idea derived from fundamentals. What else we got to talk about? The dollar. If the dollar confirms a daily uptrend of 102.23, it'll be notable. It'll be the first time in 5 weeks. That'll be a win for the bears. And I should say that a win for the stock market bears. But we got to see how the rest of these earnings go because, again, if this weekly consolidation holds EMA 12 on SPY and QQQ, the bulls are just fine. So that's now the most important thing for me for the next few days. How do the rest of earnings go? Can the dollar confirm a daily uptrend? And can SPY and QQQ hold weekly EMA 12 support? Oil is a daily bear flag. Confirmed. Gap fill 75.83. Still keeping an eye on that gap fill. And natural gas. Bulls are cautious here. You've got to hold this level and break resistance. If we set this daily lower high and come right back down and break support, it's here we go again. Full bear control still. Must hold 211.8 on nat gas USD. It's different depending on what instrument you're looking at. So overall, bull move up. After hours, financial sector is up a bit after hours. And we're just watching to see, do bulls buy the dip tomorrow during real regular trading hours when there's a lot of volume in play? I am still definitely staying nimble. Had a nice day, being ready for the bears, and also jumping on that bull crypto stock move. But I am still going to be very fluid in how I'm moving here because I can see this going both ways very easily. I do not have conviction. There's a lot of traders with a lot of conviction right now, and I am not one of them, and that's been serving me very well in 2023. I am very open to a 50% retracement, and I am very open to a bull flag continuation. And we're going to take it one day at a time, and I'm going to react to the information that I get on a daily basis. Appreciate you watching. Do good things. Check out that webinar, and we'll see you tomorrow.